Wake up, buyer payer people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhodes on the Buy Here Pay Here morning show. Take it away, you two.
Happy Friday.
Hello. We're almost to the weekend.
I know. It's I'm looking forward to the weekend. We've been those of you guys who know Jim and I, we work all the time. And we've been trying really hard on the weekends to minimize or no work. And so I'm looking forward to this weekend. We're going to try to go out for a drive, and so he can show me a little bit more about the Oklahoma Panhandle, where Jim grew up. We're still there right now, and
it all looks like this.
Yeah. Well, I mean, he has taken me a couple of places where there's some change in the topography.
Yeah,
and it's been pretty. I mean, we did a drive out to Clayton, New Mexico, and then up around a lake, and it was beautiful. And I've never seen so many Canadian geese in one place, nor heard them when they were all angry at the same time, because it was pretty loud, but it was impressive. And I thought to myself, I'm glad that these are not like attack geese or killer geese, because I mean, there literally were thousands of them in this. It really did. I mean, okay. So imagine, you've seen like the birds, Alfred Hitchcock, birds. These are not huge birds. Imagine Canadian geese.
Yeah. Coming soon to a theater near you. Goose NATO.
Goose NATO. Good morning, Emily and George and Karen.
Morning,
We're
y'all.
happy to have you all here. And it's been a good week.
A lot of stuff going on.
Yeah. Just a reminder, we talked about it a little bit last week, and we'll be putting out some stuff about it over the weekend. But Brent Carmichael and Mark Burkholder are joining us on Monday. And that's going to be a really great show. They're both really just powerhouses. I feel really fortunate to get smart guys like that to the microphone, right? Yeah. And that they're just so willing.
Yeah.
And that's the thing that I love, is it's just like, sure.
Yeah.
Where do we
send me a link.
I don't know who this Facebook user is. You're in kissing cousin country.
I don't have any.
Well,
I have lots of cousins.
Yeah. Oh my gosh. Every time we head out, it's like, oh, this is your cousin from such and such. And we were having a dinner with some friends that Jim grew up with, and the gentleman is like, I'm related to everybody in town. Yeah. And so there must be some of that, but not which I
suppose. It's a small town. It's a lot different than when I grew up here, but
it is lovely people though. Really, really very, very kind. And it's Jim born and raised, and his mom born and raised in the same area. So
it's kind of weird to go to Walmart and bump into people you haven't seen since high school.
Thanks, George. That was Jared. Thanks,
Jared poking jabs this morning.
And it was sent from an Android. So apparently there are share things that don't allow you to do that. And, we can continue the Android, whatever thing.
Yeah.
One other thing before we get started is the event that's coming up in March. We do have, if you get on to buyherepayhernationtv.com, go to register and use the discount code Early Bird Morning Show, and that will get you $125 off.
I keep forgetting to mention that.
Yeah.
And then also, we're at about the 10-day mark, 10 business days to get videos turned around for those of you sponsoring your commercial. We're getting quite a few people in this week. That's nice. So
it's pretty exciting. I mean, we're just one of the things that we where we're going with Nation Television is that it's we absolutely, I think we talked about this last time. It's like, if you can get to a live event, you should go, because there is nothing like it. You get the chance to talk to people, meet people one-on-one. You cannot replace that kind of connection, but not everybody can.
Sure.
And not everybody has the bandwidth or whatever. And so that's one of the reasons why we've created Nation TV.
Gives us a chance to bring education to your living room.
Yes. And because there are a lot of dealers out there that either are new enough in the business that they can't get away, or new enough in the business that they can't afford to get away too. So this is just something that we can.
Not to mention all those dates in between events that they can still be receiving education.
Oh yeah, as we get going. So, so today,
big topic.
And
go ahead.
Well, we Jim and Brent Carmichael talked about this on Tote the Note. So if you want to get a really in-depth view of this topic, get on our YouTube channel. It's Octane Group. Is it an Octane Group?
Octane.group.
Octane.
Well, you mean to find the podcast?
To find the podcast, or actually,
it's BHPH Institute.
At the Institute. Well,
or YouTube channel.
YouTube channels. We're syndicated,
just
but it's
Google Tote the Note.
Just Google Tote the Note. I mean, it's all over the place. So, and it's on Why Dealers Fail, and it's we were looking today, and I mean that whole just on YouTube, we've had about 200 views.
Yeah, it's been
just on YouTube. That's not on the syndicated stations that people have watched it and have stayed connected to it the whole time. So, which is good because it's really great information. We're going to kind of talk about a little bit of that today.
Yeah, and of course it's a huge subject, and it's hard to come up with a lot of common denominators. But I would urge people to go find that episode from last year, because Brent and I kind of did a long form discussion on this subject, and I watched about half of it this morning, and I just think people really need to tune in to hear Brent Carmichael and with all of his experience. And
Brent's been around the industry for. Brent was Jim's moderator for the 20 group when Jim had a dealership.
Yeah, he came in as a moderator partway into my time as a dealer, and so super
he's been
bright
for a long
guy,
time.
and people enjoy listening to him because he's got a ton of experience and shares it freely. And so, I think that I would encourage people to find that podcast. You can just look up Why Dealers Fail, and starting tomorrow, you'll find this one and the one that's the long form. But I think for today, we just kind of wanted to revisit that topic because it is something that, people can't hear enough about, what are the mistakes that we see folks make? Obviously, the work that you and I do, we're out there all the time trying to help folks avoid the expensive mistake. That's part of what we do as coaches. And so today is kind of just getting the high level parts of, what we see and kind of what Brent and I talked about that day. And there are just some really important things that we break down, in that conversation. But I would say, one of the themes that I can say that I shared in that conversation and that Brent affirmed is that one of the things that we see is dealers and buy here, pay here who fail or maybe struggle or kind of get behind with their bank or whatever, often just move too fast. Like and part of this is what I call kind of the intoxication factor. Like if you're coming out of retail or franchise and you step in the buy here, pay here business, and you suddenly find customers that aren't fighting you on price and aren't fighting you on interest rate, and will happily buy a car, if I'll just agree to put them in with $1,000 down, then that gets kind of intoxicating for people that have been making a living in retail and franchise in particular, and people coming from other walks of life as well. But when you've been fighting for gross profit, in retail and franchise, and you step into buy here, pay here, then that's tempting to just, wow, look at all this profit. Let's do lots of this, and let's create a lot of these contracts, and let's go. And they kind of, for football listeners, you kind of outsell your coverage. In football, you're talking about kicking the coverage, on a punt or kickoff, whatever. But it's really kind of just thinking ahead to one of the things we have in buy here, pay here, and you've heard me say it to so many clients, is like, I'm a believer in the buy here, pay here space, and not generally in business anyway, but I'm a believer in walk before you run, right? You hear me talk about that. Like, so we think that's an appropriate approach. Doesn't mean you have to walk for a long time. It doesn't mean, that you can't be, running. And I often say that's one of the challenges I find myself when working with retail dealers, especially coming into buy here, pay here. I sometimes find myself in this weird position of having to pull back the reins on these thoroughbreds, because a lot of them are, these type A individuals that are used to go and sell. And so sometimes I'm having to kind of pull back on the reins a little bit and say, let's slow down and let's make sure we have these pieces in place.
That actually goes into like the second bullet point about this is about, when you move too fast, you neglect some very important pieces, and that's the infrastructure. That's about understanding how all the pieces work, understanding the process, and having processes so that it's it's a well-oiled machine. It's not just a fast machine.
Yeah.
But it's a well-oiled machine, a very fine-tuned machine.
Yeah.
And I think that, it's one thing to, like, we put together this thing and we're going to hit the gas all the way fully. And it gets in there. It's like, I'm sure that when you think about someone building a car and they put this thing together, it's like, let's see how fast it can go. That's dangerous, because you hit that gas and it's like, oh my gosh, this gasket wrong. This belt is not properly whatever. This widget, gadget, whatever is not tuned.
Yeah.
And so you get out there and you're going fast, and it's like all of a sudden you hear the boom, 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 and then you might go again, or you might not.
Yeah. Yeah. That's a good way to think about it, I think. And the other thing that I told in that is, for folks who don't know, I spent a short time, 2.5 years or so, in the retail, like, franchise business, used cars too, as a salesperson and a sales manager. So I had, introduction to that space before I stepped into Buy Here, Pay Here. But I can tell you that it didn't take me long to adapt to the Buy Here, Pay Here mentality. Probably helped that I owned pawn shops before I ever, was in that business. So I understood a little bit about the finance side of it. But bottom line for me is, I think, and I told that story, by the way, in the Tote the Note podcast with Brent. I did tell the story about my own dealership. Like, I had my own dealership failed, and I tell the story about, where I went off the rails. And so it's a simple
so you've
lesson
learned.
For sure.
And the other thing is, you've experienced yourself, and we've been, you and I, in the last couple of years, have talked to enough dealers to, it's like, oh, that's a problem. Oh, there's common themes around some of these pieces.
Well, and I think back to the thoroughbred thing, and I see Karen Barnett's joining here. She meets some of these folks too, like George Batt. You've talked to a lot of these folks over the years. Is like, one of the things I remember a story, and I didn't tell this in the conversation with Brent. It's like, I remember meeting a dealer who we were coaching into Buy Here, Pay Here. They had already failed in Buy Here, Pay Here, and were wanting to make it go out again, had a new investor, wanting to make it go again. I was coaching them into it. And I remember the gentleman told me one day, he said, in my prior dealership, he said, I personally delivered 15 cars in one day. He said, I personally delivered 15 cars in one day. And those of us listening who've been around this business can already think the same thing I was thinking. Well, there wasn't much underwriting then, was there? We didn't underwrite the deal. We didn't much verification or whatever, because that's just a huge amount of volume for any one person. Right.
Yeah.
And so it's just, I think that's that thoroughbred thing, is like, you're racing to what? Like, what are you creating as you do that? So I think for me, sometimes you've heard me with clients that they'll get in business and they'll sell 3 cars a day, and they're excited, and they call and they want to celebrate. And I say, look, I hate to be, a Debbie Downer, but I said, I'm more likely to celebrate with you when the customer has made a payment that crosses you into profit, or because really today we haven't done much of anything except take a risk on a customer who hasn't shown a lot of financial responsibility in the past. And so why are we celebrating the fact that and look, we get it. You got to create contracts to create cash flow and all that. We get it. But we sometimes put the celebration in the wrong place. All we've done today when we sell a car is go negative on cash, typically, profits out there in the future if the contract goes well. And what Brent said in the session was that, often we don't know if we made a good decision for about 18 months, so we got to be careful about celebrating prematurely, and keep our eye on the bigger prize, which is successful contracts, helping the customers be successful. Right.
Yep. And like having very, very good rails for your underwriting.
Yeah.
And, all the different processes and
Absolutely.
those things that help you be able to write good paper and be able to collect well on that paper as well. Because, I mean, you can also have great underwriting, but if you don't have a good collections process or good collections team, or because we've seen as well that there are dealers, it's like they're out there and they're selling, but they are burning and churning through customers.
Sure.
And
Michelle has to take a call. She'll be right back. So
I forgot to silence my phone. I'm sorry, but they're churning through customers because what ends up happening, they don't have a good collections process, and good training in their collections, and so all of these deals that they have written, that it's like, well, it's it's a crapshoot. Maybe they'll pay, maybe they won't. And if they don't pay, we'll just we'll just repo. And there's a lot more to it that could be helpful with you taking the time to create the processes and the systems and when do you call them back? And what is the first thing that you do, collector, when they come in to help be the most successful in that collections? It's walk before you run. Let's figure out all those processes before we just,
because
bullet into something.
Brent also told a story about a dealership that he was, involved with. They sold to actually was a public company that bought the dealership, and they had this really aggressive growth strategy. And they acquired that operation and implemented their aggressive growth strategy, and were out of business in no time. And so it's like that. You're right. That's infrastructure piece is part of what he cited in there. Is like, if you lack the infrastructure to support that growth, then you just end up creating a really volatile, even, unprofitable portfolio. And so that's not anything anybody wants to hurry into,
Yeah. And, we, those of you who are familiar with what it is that, our why and what it is that we really, our foundational pieces is that, we're not real fans of just burning through customers. And it's, it's you really want to be able to develop a relationship, and that's where the success comes. That's where, and some people that might be in a bigger market have the ability to burn through and not feel that as hard financially as some in a smaller, but it's just overall, it's, just.
Well, it's a couple of things about that. I mean, one, if you just look at the experience of both the customers in that example and the employees, like the whole team, that's a really negative, environment. And so there's that factor.
Well, and it doesn't have to be an attitude thing with the dealer. Like, I don't care about the customer or whatever, but it's like, if your team doesn't have the tools and the framework to work, it's kind of the same thing, is that, you're going to burn through customers because you don't have the framework for your team to be able to be the most successful.
Yeah. Which I think leads me to the part about, one of the other reasons we see dealers fail is they really kind of get lost in their performance reports, financials. They really don't have a good way to understand what's happening in their business. And sometimes by the time they are in a bad place, it's too late. Like they might get underwater with their borrowing base or those kind of things. And so
another one is performance tracking.
Yeah. And that ties to financials too. It's like, we need to understand, first of all, how our portfolio is performing, how much cash it's yielding. And so Brent and I talked about that in the other podcast, but it's basically, we have to understand those things, and we have to kind of understand it, because that's the other thing we see with people coming out of retail is they have a hard time adjusting to this whole thing with, cash flow and how it's different, in our space and so on. And so that's one of the things I shared is I just think if we come into the buy here, pay here business and we're very sales minded, like we're heavily sales minded day in and day out, I would say, be careful, maybe find a partner. It can be a dangerous recipe when you're very sales focused and you don't take the time to really put the pieces in place on the collection side, then you're really not accomplishing much. And so it goes back to that thing about getting drunk on the profits and kind of celebrating prematurely, is like, we really don't know, how well we've done with that contract because of, like you said, underwriting and some of those things. But we really can just sell to a place where we're having trouble managing the portfolio. And now, it's like we're losing about as many customers as we're putting in the portfolio. And so that's just a thing that we know that's a thing that can be avoided.
So are you talking about dealers not understanding their portfolio enough to know whether or not it's healthy? It's one thing to have, a good amount of cash coming in or whatever, but to understand if it's healthy or if it's not healthy.
Right. Yeah, for sure. You got to know if it's performing well, so you can obviously take corrective steps when it's not. And then also that helps forecasting cash flow, and anticipating how many deals you can afford to fund, next month and the month after that. So it's all those factors. But I think the one piece that I want to make sure we talk about is the other one's just leverage. Like, and I would urge people just find that podcast so that you can see the expanded explanation around leverage, because we did talk about some scenarios where you can do some calculations, and when you're over leveraged, then you take away a lot of the margin for error that is available in buy here, pay here. And so, we don't have to get into all the numbers now, but we just know that, and, Karen's listening and some of the other folks that have been in this space, like it's a common thing when you get over leveraged, when a bank will advance a higher amount, whether it's a partner, cousin, whatever, where the money's coming from, or your own money. If you're putting too much of your money in as a percentage of the assets in the portfolio in particular, then that can get you in a bad place. And we're headed into a fairly uncertain time in buy here, pay here. Most folks are predicting that that there will be more opportunity for buy here, pay here in the next 12 to 24 months. I don't have any reason to dispute that. I'm not a prognosticator in that way. My attitude's always been, it's kind of just going to stay the same. Like it's going to be same amount of funding opportunity for most of us. But either way, we got to make sure that we have our business positioned well for whatever business is to come. I do think, obviously with inflation being what it is, it does seem like we're going to be in a time where it's going to be important to run your business in a lean and healthy way. And so I think it's all the more reason for us to guard against these things that we see, take dealers into a bad place. And then the last piece that I also touched on with Brent, and is something that we just see, and I realize, look, when I'm talking, dealers are listening who might be a client or former client or potential client. Either way, it's like I obviously feel an obligation to share the things that we see to help people avoid finding themselves in a bad place. And one of those things that I see across the industry, and kind of ties into this whole thoroughbred thing I'm talking about, is just the simple thing about ego. And I've talked about it. I mean, we can say that ego itself is not a bad thing. I mean, it's part of what drives us to get out of bed and do what we do every day. And it's part of what drives a lot of people to be successful. I think the part that I'm trying to bring forward and make sure we think about is when ego drives us to build a bigger portfolio than the guy across town, or
because we want to be the biggest, and put other people out of business, like. The whatever. Yeah.
It's egos by itself is not a bad thing. It's just that when ego causes us to make judgments or make decisions that aren't consistent with the things we just talked about, infrastructure being, and buy here, pay here, we've got those added layers of things we have to address. And so when ego drives us to especially move too fast, like where we started, when we move too fast in this business, and that's often driven by ego, then that's a dangerous recipe, has been my experience. And like I say, I'm not, we all carry some degree of ego, right? It's not that it's a bad thing. It's just that when we let it cloud our judgment, when we let it drive us to a place where it clouds our judgment, and we get intoxicated by the profits, or we get intoxicated about outbuying the guys at the auction, or whatever that looks like. Just, that might work better in retail. In buy here, pay here, I feel like it's a dangerous thing. And I think it's something we got to get our ego in check when we step into buy here, pay here, and really think about playing a long game.
Yeah.
Yeah.
I maybe kind of on a, not really a personal level, but when people in general are making decisions based on ego, because I know, or I'm right, or I'm right, you're wrong, that kind of thing. From your perspective, that may be true, but it may not be true. And so pulling yourself out of that, and this has been like a theme just for me, personal growth, all of that kind of stuff, is that sometimes there might be a better way. Sometimes there might be a different way that will get different results. Sometimes, that and being able to pull yourself out of, I know what I know this is the way you do it, and not looking at your choice or your decision as an option, but it's like, this is the right choice, or this is the right way to do it. And there's a lot of ways to skin a cat.
Yeah.
And so sometimes ego keeps us from being able to be open to see other ways of doing things, that, you may be really successful doing it this right way, but making a tweak, if you're open yourself up to it, you may change the results. And, another piece to that is, what do they say? If someone's that's like, I just got to try harder. I just got to do more. Well, it's the idea that doing the same thing and getting a different result is the definition of insanity.
Right.
It's like, if it's not working for you, then you really should step away from the whole decision-making process, the whole, your whole model, whatever it is, and look at it from a different perspective, ask someone else to look at it, whatever, because that's going to be the best, and pull yourself out of feeling hurt if you did it wrong. And being able to look at a different perspective and be just open to the idea of there being a different way.
That kind of ties into me to the conversations we've had in the past around, I've always pushed back for most of my professional career when I hear this phrase that comes around pretty routinely, which says, execution is everything. Most of us have heard that expression, execution in business is everything. Well, I don't think that's fair. And I think the reason it's not fair in my mind is that it doesn't allow room for the creative innovation or innovator, that is part of a business. And so you can kind of tie this to what we're saying is you can show up every day and work hard and do X's and O's. But if the strategy is flawed and we're just married to it because this is a strategy I committed to and I'm going to show up every day and I'm going to keep working this strategy, that's execution, but it's maybe in the wrong direction. And so that's why I say I don't think execution is everything, because in my mind, execution is without a clear strategy, a clear vision for where we want to go. That's just movement. That's activity. And so that's why I say, I think the way it ties to what we're talking about here is, I think, ego can sometimes keep us from getting to a place where we can take off the blinders, accept some, take a look at some other perspectives. This is one of the arguments, frankly, for a 20 group is why, dealers ought to think about being in a 20 group at a certain stage of business. It certainly could make sense. But even if you go to 20 group, you got to be able to take the blinders off and listen to other ideas and not show up to sell people on this is my way of doing business. I'm right. I'm committed to this plan. We have to be open-minded. And this is where ego gets in the way of us being open-minded sometimes. And so I think, if I see a common denominator across the industry with failure, and I'd love to continue this conversation with folks who've been at this business a long time and they've seen a lot of dealerships come and go. And so I question if that, other people are seeing the same thing, because it's just been my observation, which, I've been in more than half the US states, working with dealerships. And like Brent said, thankfully, I haven't had a lot of my own clients fail, but we know what happens and the stories and you kind of, get the piece together what's happened. And I would just say that's kind of the common theme that I see is ego causes us sometimes to drive too fast. And this business just really needs some underpinning.
Yeah. So there's, we've covered 5 different things. So just to kind of a wrap up, moving too fast. So watch how quickly you're trying to, how intoxicated you are with, oh my gosh, I sold, the next one is lack of infrastructure. So having a good underwriting process, having a good collections process, having people in your team really understand what the process is, what their rails are. And so, you can feel really confident about that infrastructure. Next one is performance tracking and accounting. So do you really understand what's happening in your portfolio?
And if you don't, say so.
Yeah, it's okay.
Be prepared to say so and get some help.
Yeah. Cause there's, we could probably bring on Amanda and she's like, oh my gosh, they came to me when it was already a mess. And I wish they'd come 10 years earlier because could have saved them a lot of heartache.
Well, how many dealers have said that to us?
A lot of dealers have said that to us. And then over leveraging yourself is the 4th one. So just, make sure that you're not too deep in debt that if something were to go a little bit sideways, that it wouldn't just completely cave you in. I think that I know it was Darla was one of the people that talked about this idea, but you would mention there's others too, that it's if you can't double your charge-offs and still stay above water, then you have a problem.
Yeah, Brent and I talked about a scenario on that.
Yeah, and then the last one is ego. And so just realize, and it's a beautiful thing that in this industry that it is a lot of type A personalities,
Mm-hmm.
and you have to just I can conquer the world, and
Mm-hmm.
that's a beautiful thing.
Yeah.
That's a really beautiful thing.
Yeah.
But let's just make sure that we kind of keep that.
It's just unfortunate when we put that effort in the wrong direction. That's what I see. So I think that's what we try to, be mindful of is, it's vision. It's having, so part of that is around what you said about the reports is we have to have clarity about where we're trying to go with our business. And a lot of dealers are lost in their numbers, and it's understandable. It's difficult in this space to really have a full grip.
And I think one of the things, thanks for your comment, George, about doing wrong activity faster just gets you where you don't want to be quicker.
Permission to borrow.
Is one of the things, just closing thought from me, that Jim is always, when we talk to new clients, you can never sell yourself out of a problem.
That's rarely the solution.
The solution is to not sell more. That's not the solution. So don't, if you're having a problem with how things are going in your business, and it's just, and if you find yourself going to that, if I could just sell 5 more, I'd be fine. If I could just sell 10 more, I'd be fine. That is not a solution.
Yeah. If you find yourself saying that, recognize it as a potential problem, and reach out. If we can't help you, we'll point you to somebody who can. So
yeah. Okay. All right. Well, thank you guys so much for joining us on Friday. Hope you all have a fantastic weekend. Looking forward to Monday. Brent Carmichael and Mark Burkholder will be joining us.
They have all the answers.
They really do. They're both really amazing, and I like them an awful lot. All right, guys, have a great rest of your day. Thanks so much for joining us.